Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. A viewer had a question on my IUL video where I went over the pros and cons of IULs. And he says, I'm an agent of PFA that partners with National Life. Thank you for your videos. I learn a lot. Can you tell me the difference between IUL and Vanguard ETF? I have a guy who prefers to invest money by himself. He said he doesn't need living benefits because he would have disability benefits from the government. Also, he has the free life insurance from his company, a $50,000 policy. So good question. Don't mind helping out other agents. I'm glad to see that you're learning from my videos and hopefully designing a lot better policies for your clients. PFA writes an enormous number of policies for National Life. They're one of the top. In fact, I think they are the top nationwide partner with National Life. They really outpace everybody when it comes to National Life policies, and I'm glad you're out seeking better information. So I'm happy to help you out. Stick around.
Oregon Cash Flow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Okay, so there's a few things about this that intrigued me and why I wanted to turn it into a video. I will get to his question in a little bit, so if you want to skip forward to the answer to that, you can just go right to this time in the video. Otherwise, I need to give a little bit of background on where I'm coming from when I answer this question. I'm not securities licensed, so I'm not going to talk specifically about Vanguard ETFs or recommend them or whatever the case may be. You need to be licensed in order to do that. And so I don't talk to my clients about that either. The main reason is I don't want to be securities licensed. I don't really care to sell anything that has to do with the stock market. I don't want to be subjected to their regulations as far as that goes. And I'm just not too interested. My conservative nature when it comes to, I wouldn't say I'm a conservative investor, but I just tend to not like to lose money. So the insurance realm fits me better. It's possible that there's no way that you're going to convince this person that an IUL is going to work out best for them. Certainly not compared to a product like the Vanguard ETF. What I was getting at was I don't have a lot of experience when it comes to the actual stock market and how that's performing because I choose to avoid that. I do have a little bit of experience, however. I read and I try to learn about these things, and I have a little bit invested in the stock market. I have a Robinhood account and I have a Webull account that I kind of play around with small funds. I think I started out with about $100 on each of those accounts just to play around with it. Now I'm up to anywhere between 4,000 and 8,000. If anybody is interested in that, Robinhood is a really great place, I think, to start for beginners. It has a really intuitive interface, and it makes it really easy to just kind of dabble. Whereas Webull is a lot more detailed. I get a lot more information on any particular stock. You can have conversations with other people about those stocks within the app. There's just so much more information when it comes to the Webull app. And they're both no cost to you. It's free trades, so it's a good place to get started. If you're interested in that, I will leave a link in the descriptions below with my referral code. So if you use that, you and I both get free stock. So check that out if that interests you. But that's about the extent of my involvement in the stock market. Now, how would I approach this particular potential client that is interested in the Vanguard ETF? So I don't quite have all the information in order to prepare you for your interaction with this client. I don't know what his finances are. I don't know what his overall financial situation is, how much he's investing in the Vanguard ETF. Is he doing this through his 401k, or is he doing it with after-tax money already? What is his overall investing strategy? That makes a difference. So Vanguard has 80 different ETFs. So which one of those is he using, or maybe he's using a whole bunch of them in order to accomplish his investing goals. Here's a list of those choices of ETFs, and you can see there's a number of them. So to any of those ETFs, it's hard to do without a lot more information. Okay. Now we know that with the IULs, you do get the stock market protection. This client, they're not worried about having downside protection in the market. They're willing to take that risk, and that's okay. Like I said, I don't know what his overall financial situation is. So the way that I would approach this is I would talk to him about maybe doing a small portion of what he invests in the Vanguard ETF, and either use a small portion of that in this, because the IUL does offer you potential growth. It offers you good potential growth. It has the downside protections. It offers you the additional living benefits, which, despite his thinking that he doesn't need them, they could still come in handy. So he says he doesn't necessarily need the living benefits because he gets disability benefits from the government. I don't know what all that entails, but it sounds like it might be benefits from either being in the military or from some type of a government job, or maybe he got injured and he's on permanent disability, something like that. The living benefits serve a different purpose in my mind, and so this is the approach that I would take. The living benefits that National Life offers function sort of like a long-term care policy. Now, if you become terminally ill, if you become critically ill, you become critically injured, with National Life policy, you have access to that full death benefit, or a large portion of that death benefit, prior to you actually passing away. So you have the opportunity to avoid going broke or going bankrupt due to medical expenses prior to you passing away. Those funds can actually help you to live as long as possible. And the main point is that your family is not going to go bankrupt before you pass away, only to suddenly now get a death benefit afterward, tax-free, that would have done much better had they had it a few months prior or a year prior. The advantage there, compared to government disability benefits, is if you are relying on Medicaid for those payments, you have to basically be broke in order to qualify for Medicaid. Medicaid pays long-term care, right? But you can't have more than $2,000 in assets. That means you can't even own a car these days, or you're going to not qualify. You can't own a house. People have to force themselves to go completely broke in order to qualify for that type of care. The other thing is those disability benefits they could just be a regular payment, a set amount. So if he is to get a terminal illness beyond that, how much of that would be covered? It's hard to say. If he gets cancer, if he gets some other debilitating disease that ends up with a much higher cost than whatever the benefits are willing to cover, that's where the living benefits from the IUL, specifically the National Life policy, could come in handy. So that's the way I would approach that portion of it. As for comparing the IUL and the Vanguard ETF, you can't really compare the two, but you can pitch the benefits of having the growth opportunity in the IUL without the downsides, and maybe try and get him to put a small portion towards that. It would not only be an alternative as a safe form of investing for him, but it will also provide additional death benefits. A $50,000 death benefit is almost nothing. So I would also talk to him about what he expects to do with that $50,000. Where does he expect that $50,000 to go if he passes away? It's certainly not going to serve as an income replacement. If he's on Social Security already and he doesn't have a regular income, his Social Security is going to go away. Or if his wife's on Social Security, so either his Social Security or her Social Security will go away when he passes away. So it doesn't serve as an income replacement. So what kind of debts does he have? $50,000 will cover a funeral. I think funerals these days cost anywhere from $10,000 to $20,000. Depends on how in-depth they want to go, if he wants to be buried or cremated or whatever the other options are. But is it going to provide his family time to grieve? Are they going to be in a financial crunch where they have to consider going to work or going back to work in order to keep the household going in the event of his passing? Because $50,000 will only buy them a small bit of time. Are they going to have to sell the house? Are they going to have to liquidate any other possessions if that were to happen? So these are things that you need to consider. You as the agent should be finding out these answers from them so that you know how to approach your response. Because in my opinion, everybody has a need for life insurance. If you take a look at my wealth pyramid, which you can see that video right here, where I go over what constitutes how to build your wealth safely, we have in the base of that wealth pyramid insurance. You need to make sure that you have enough insurance, whether it's health, auto, home, or life insurance, or even just overall liability insurance. Insurance serves a purpose to help secure the base of your overall wealth foundation. So like I said, check out that video and you can find out exactly what I mean there. But make sure that his financial situation has all of those bases covered. $50,000 in life insurance, it doesn't sound like he has that base covered. So your job is going to be, how do you show him that he can get that base covered in a way that will also help to meet his financial needs? It's not just about using a dollar to do one job, which means buy life insurance. If that's the case, you could do that with term insurance, and you can do it very cheaply. But term insurance comes at a cost, and it has a specific end point. Whereas our permanent insurance options, IUL and whole life, you end up with a break-even period where at some point you're going to have more cash value in the policy than you've paid into it. And if you're designing your policies correctly, you will be able to make that pitch to him as well, and you will be able to show him how his dollars can do multiple jobs for him, giving him more than enough life insurance, taking care of his loved ones, providing for charities that he wants to when he passes away, and really being the legacy gift that he would like to leave behind. So hopefully that helps you answer that question. Good luck speaking with that client. As I put down below, you guys can ask me anything and I will do my best to answer, and I may even turn it into a video like I did here. So if you found value in today's video, be sure to hit the like button below. Subscribe if you want to follow along on this financial journey that we're taking together. And if you want to learn more about IULs, take a look at these videos right here. We'll see you next time. Now go maximize your cash flow.